We're going to look at the three major areas in Western Montana. But what's interesting about this is that, of course, like everything started basically like 2019, but it really started accelerating in 2020. And then we get to, this insanity of how high prices are. So Helena's at a median of 480,000, Missoula 566,000, and Kalispell at 550,000. We have to give an accurate picture to the public. No sales fluff. So homes for sale, the number of homes that are coming on the market are actually going up. So that's going up, but this is where it gets really telling in the health of the market. We had our big peak of people moving into the areas. And I mean, like there are some places that saw huge influxes as far as pending sales are concerned, Missoula being the biggest one, Kalispell, pretty substantial, and then Helena, like pretty substantial. But what's funny about this is that they're all tracking the exact same factors. If you were to take this and try to find a place, let's just go 1 month into the past, and Helena at 639, the only other place where you have 639 is going to be May of 2012. May was the worst year for real estate volume on record. So 2012. So basically what happened is that if you can look, you would see that the number is slightly higher. We had the 2008 downturn, took a couple of years to actually reflect here in Montana, and then it hit the fan. What happened is that the downturn began for other places in the country about 2023. So if we're tracking it with that, we're actually right on track for having a pretty significant downturn if all the trends are the same. And you can see that pending, and this is the big tip off, how's the market doing? Pending sales are literally falling off a cliff. And then closed sales, it's up a little, but overall the trend is significantly down, especially when you look at like Missoula and stuff. Since Helena is my main market, the one that I'm the most active in, I pay more attention to that. It's a little bit more stable, but it still is showing pretty significant downward trend. Average days on market, and you can tell because right here, worst year, I mean, you're looking at an average days on market for Helena of 140 days before it actually closes. So that's like almost 5 months. So almost 5 months before property closes. And then you go back here to like the peak. And even that, it was 67 days on average, but that still is less than half of what it was at the highest. And then if you go back here, the days on market are starting to go back up. Months of supply is going back up. The big tip off, and you can see here, Helena, as far as days on market, has been much steadier, than like say Missoula. Or actually, wow, Kalispell, they were at 16.4 months of supply, which means that during that time it was a really heavy buyer's market. We were pretty stable. We range between like 2 to 4, but right here at 2.9, the big tip is at 3. Once you hit 3 months of inventory, you're making a really serious transition into a buyer's market. And the reason why all that's happening is because of this guy right back here, is going back to the sales price. And we can look at the average. It's a little more chaotic, but if you look at the average, Helena saw a decrease, which we need, but then it plateaued again, but it's still really expensive. So your average house in Helena, Montana is $522,000. If you were to back all those numbers out at 522,000, in fact, we can just do that right now. So we'll just do 522,000, and we're going to do a 5% down because that's about how much money people typically have. Still a lot of money, but it's sad that it's a 5% down. Property tax, we'll leave it there, we'll leave that there. Insurance has gone up, and then we'll calculate what the monthly payment is. So the monthly payment on an average house is $3,792 a month. The median household income is $74,543. Median household, average household. Go with the average. So it's 100 grand. That's pretty good. So $100,000. And that's, I believe that this is all going to be pre-tax income. So that's $8,333 pre-tax. Basically account about 20% of that on average is going to go to tax. Okay. And then let's just go half of the income. It's more than half of their income to have an average home. What did we have? It was $6,666. And our mortgage payment on that is $3,792 minus 3,792 That leaves them $2,874 to live on. If you are a household, you typically have kids, so let's say that there's like one kid in there. You've got like your medical bills, health insurance payments, stuff like that, whatever. So let's just say that your normal, I mean, like your normal living expenses, considering if, well, let's say that you've got a car payment, just one car payment. Most people have two car payments. So we'll be generous and just say that they're spending $1,000 a month on car payments. So you're down to 1874. If you're in a household, you're probably spending about $800 a month in groceries. So you're down to $1,000. You've got a utility bill, and let's say that it's winter time, and that's going to be about $350. So you're down to $724. Say that you have an emergency room visit. Actually, you haven't met your deductible on your health insurance. So, $2,500 emergency room visit, and you're upside down for the month, $1,700. So that's the reason why when you look at that's what's happening. That's what's happening when this doesn't come down. Interest, oh, and this is the other thing too. So interest rates, this is kind of like your sort of like middle of the road interest rate, 6.48. This is the other thing that is important. We'll go to the average. So average percent of the list price. So this is how much the properties are actually selling for. So like they're listed at say $100,000, just round number. That means that on average in Helena, they're selling for 1.8% under asking. So that means that the sellers really aren't moving off of the price very much. What this is telling me here is that if we've got pending sales declining, our percent of list price is basically 100%, but our sales price is still really high. It means that there are just a ton of sellers that are sitting on the market, and they're going to hold. And what people don't understand is that they actually are a member of a much larger market. So that's the thing that's interesting about housing, is that it's a very personal and emotional type of a purchase, but you're entering into a very dispassionate, numbers driven market, exactly like the stock market. There's no difference in that regard between real estate and the stock market or commodities or whatever. The numbers are the numbers. The numbers don't lie. If you've got good data, the numbers don't lie, and this is the most accurate data that you can get. Unless unless that changes significantly, or this changes significantly. So unless the sales price comes down or the interest rate comes down, this is going to continue to fall. The rest of this, price per square foot, that's going to relate to the sales price. It's still really high. That hasn't moved. Maybe it's come down like a little bit. No, it's actually gone up a little bit. Dollar volume, this just gives the number of dollars of closed sales. And I think that this must be like a cumulative for the year, because there's no way that we sold $338,698,000 worth of real estate in July. So that's got to be a run. Yeah, it's a running